You could argue having more solar renewables is a national security asset because on a go-forward basis, it doesn't require any feedstock. So we're not using any US-based natural gas to produce solar or wind. It's O&M, and that's pretty much it. So once you put an asset on the ground and you've got a solar array, it's going to last for 30 plus years.
Hello and welcome to the Solar Maverick Podcast, where solar meets entrepreneurship and experience. I'm your host, Benoy Thanjan, so let's get into it. Hi, this is Benoy, your host of the Solar Maverick Podcast. I'm really excited on this episode to have Rich Weihe. He's the Managing Director of Rosemawr Sustainable Infrastructure Management. They're a private credit investment management firm. Rich, it's great to have you on the podcast. Thank you for making the time on a late Friday afternoon where you are.
Hey, Benoy, it's great to be here. I'm a fan of the podcast, and I'm grateful to have the opportunity to be here with you.
Yeah, definitely. Rich and I, talking about in the pre-interview last year, might know each other for at least 15 years, maybe a little bit more. If I remember, I was telling you that I met you at R&K Capital briefly, which is amazing, that I can't believe it's been like 15 years that I've known you, but it definitely seems like a very long time. And you've done a lot of amazing work in the renewable energy space. And obviously you're a solar maverick being in the industry and providing, so much thought leadership and did a lot of creative investments and deals. And we could go into all that. If our listeners are not familiar who we call Mavericks, can you talk about what Rosemawr does?
Yeah, sure. Yeah, again, Benoy, thanks for enabling us to be on the podcast here. And yeah, the time flies. It's been 15 years, but yeah, time flies. So, well, yeah, in terms of Rosemawr, so just background on Rosemawr, the firm was founded in 2008 initially as a municipal credit fund, and we still have a flagship fund that focuses on municipal credit related opportunities. But in the late kind of 2010s, 2017, 18, 19, the firm started investing in C-PACE, commercial PACE related transactions that have a municipal element to them, as well as an infrastructure element. And that really whetted the firm's appetite to extend into investing more into sustainable infrastructure and things like renewables. So in 2020, three of us joined the firm to start Rosemawr Sustainable Infrastructure Management. And there's now six of us on the team. And we focus, primarily on credit opportunities in sustainable infrastructure. That would include things like pre-NTP development capital, things like interconnection deposits, equipment deposits, through construction financing, and in some case, term financing on project-oriented opportunities. And then from time to time, we will have the opportunity to own assets, but the majority of our work is really credit-focused. Firm's based in Miami Beach. It started in New York City, moved to Miami Beach a couple of years ago. And Rosemawr's been very supportive of our team and what we're doing. And it's been a strong, great professional group to work with.
Yeah, that's a great introduction to the company. You briefly talked about kind of the opportunities that you're looking to invest in the renewable energy space. Can you go into more detail? I know I saw in the press some of the recent transactions that you've done recently. And also, too, you've been involved in repowering of assets as well, which a lot of the industry is talking about. If people are not familiar, repowering of assets is basically taking older solar assets and then basically, updating the panels, inverters, or other sort of equipment within the solar project to extend the life, which is really interesting. And I think there's a huge opportunity. I know you mentioned you do own projects as well, but it's primarily, a credit-based fund related to pre-development and equipment and construction financing.
That's right, Benoy. So yeah, in terms of the bulk of our business is really credit oriented. And I think one way to look at it is short duration credit versus longer duration. Short duration is primarily deals that are anywhere from bridge loans to pre-NTP development capital on things like equipment, interconnection deposits, which, as you know, are huge expenditure line items for the development community. So we're heavily focused, invested in that area, looking to partner with developers that need that sort of financing. And so we've continued to look in that area and focus on that particular area. And then also in the shorter duration bucket would include construction financing. So we work with developers and IPPs that are looking for construction financing facilities. We unitranche finance these projects, so it's a higher advance rate loan relative to typical banks. And it can work well with developers that really are going to maximize the advance rate and get their projects to COD. On a term basis, we will opportunistically look at providing term loans. We completed a securitization last year on a book of more of our term business. That's another piece of the credit portfolio for us. And then finally, you mentioned owning projects. From time to time, we will partner with developers, and we have on repowering opportunities, both primarily in solar. We've worked on repowerings with developers, and we've also taken ownership stakes in battery storage related projects alongside developers. So those are really interesting opportunities that we come across that are not necessarily being heavily marketed. They're opportunities we come across through our relationships, just bilateral relationships within the sector. And when we come across a developer we've known for a long time, where they have an opportunity where they need some capital and there's some aspect of the deal that is either more challenging for typical project finance lenders, requires more flexibility, or maybe there's a time element to it that's quite challenging. Those are the sorts of things that we look for.
Yeah, that is really helpful and that's really interesting too. Can you talk about what are the qualities that you look for developers that you do work with? It sounds like your developer relations are people that you've known extensively, or it would be great to get your perspective on how you bring the deal flow and determine who to partner with when it comes to developers.
Yeah, I mean, as you know, the marketplace is so heavily fragmented, and especially in the middle market, which is where we operate. So I should mention that we will look at utility scale from time to time, but most of what we do is typically the deal sizes that fit with, let's say, your average community solar project. So large DG to kind of smaller utility scale grid tied is what we look for. And in that segment, there are multitudes of developers. And so we, like you and I, we've known each other for 15 years. So we do leverage our network of relationships over the years to be in touch with developers. And as you know, larger developers will spawn teams to start their own shop or IPP. And so it's continually morphing. I always, mention to our team, I think if we make an assumption that the sector is static and everyone's doing the exact same thing today as they will be next year, then chances are we're going to be missing out on opportunities. So it requires a constant, cultivation of that. But in terms of parties we work with, yes, certainly a lot of it's through our existing network, sometimes through introductions or inbounds. And again, primarily where we focus is in the middle market. Most of the developers we work with, if not all really, are groups that even if it's their first project or group of projects, they've come from development background before. So they have a real depth of knowledge. Also, as you know, the development space is so localized. And so it's important for us to work with developers that, they've been in a certain neck of the woods for a long time and they know that quite well. I mean, going from one state to the next, it could have a completely different RPS, but it could have a completely different community solar program or permitting elements, and it can be quite challenging. So sometimes we find a developer that might not be name brand, but they're really in deep in a particular state and have staying power. I mean, that can be a great group for us to work with.
That is such a great point. I mean, there's so many great points that you made about how you partner with developers, but how development is localized. And really, there's these local developers in each state who have an advantage because they have the relationships, they understand the policies. And as you know, being community solar in one state is totally different. Community solar in another state could mean totally different things. So that's a really interesting perspective. And then I was interested too. You mentioned that Rosemawr invests in energy storage projects. Is there any is it standalone storage? Is it solar plus storage? It would be interesting to get your perspective on, prior transactions.
Sure. I mean, without mentioning anything specifically, we've certainly had the ability we've worked on deals that have been both co-located, solar plus storage, as well as storage standalone. From our perspective to date, most of what we look for if we're going to have a long-term ownership stake in it is to have some sort of PPA equivalent or some sort of predictable revenue offtake as opposed to completely merchant, because we're really not merchant operators. Now, we could consider on a pre-NTP development lending basis to lend to groups that ultimately are going to own an asset or developer that's going to sell an asset that has a highly merchant element to it. But if we're taking a long-term position or stake in one, we'll look to the key characteristic on battery there would be one where there's some sort of capacity revenue or some strong element to that particular project, has some recurring cash flows that are predictable. And look, I understand that a lot of battery storage does not at this point. So much of it, certainly in ERCOT, for example, it's a merchant play. That's the name of the game in ERCOT. But for us, it having some sort of hedged out element or some sort of recurring cash flows that are more predictable are really helpful for us.
Yeah, definitely. That's really the challenging part, right? Is to find long-term offtake specifically for battery storage. And obviously, I know certain states, have certain sorts of long-term, like the Massachusetts SMART program obviously has like solar
Right.
storage long-term incentive, which makes it easier. I've actually tried to hedge the different battery storage pieces, and it's challenging because it's really longer term hedge from a bank or an energy trading company. So
Yeah, absolutely. And some of these revenue streams like capacity or other sorts of ancillary benefits, they're fairly opaque and easier said than done to kind of get long-term hedges on. So New York Veeder is another one where there's some elements to that Veeder stack that can allow for some of the position or some of the revenue profile to be hedged out for a period of time, which again is something that we'd be more interested in, at least from an ownership standpoint.
of course, that makes a lot of sense from an ownership perspective. And is there any like specific states that you prefer to work in compared to others?
Yeah, I mean, it's a great question. I've heard this before, but like the US from an energy perspective is so it's balkanized in terms of, we mentioned it earlier, you go from one state to the next, it can be a completely different opportunity. And on one hand, that's a challenge because, you constantly have to work up to becoming an expert in one state. And then all of a sudden a program starts somewhere else and then it's back to the drawing board to get familiarized with something. So it's a challenge, but also an opportunity. And in the US, we do just focus on US and US territories. That's just focused the charter of our business. So we're opportunistic. I mean, we'll look at deals where it may not be an obvious state to invest in. It may not have an RPS. There may be limited abilities for deregulated kind of power sales, but there still could be some opportunities for us to play in. I'd say a lot of where we've done work to date have been in states with dual incentive programs, primarily, let's say, community solar and RECs. There can be a layering of benefits where you're talking about community solar, the underlying power revenues, plus perhaps RECs. So we've looked in a lot of those states. And, it's interesting, like I've been following RPS states and RPS markets for close to 20 years. And, you see over time how the number of states RPS have gone up. So if we were to look at a map, like from 20 years ago, how many states had a renewable portfolio standard then versus now, there's more. You've seen the same with community solar over the last several years. It just seems like a new state comes on. And so we'll certainly follow those types of states, but we're open to opportunities in areas or states that are less obvious.
That makes sense. And obviously, like if you're able to get a state that's less obvious earlier to the market, I think there's more opportunity, right? And it seems like developers are aggressive, right? Once it's clear the RPS or if the numbers make sense in that state, there's suddenly an aggressive movement by developers to come into that market and it gets saturated.
Absolutely. Absolutely. And it's tough. Like in some of these markets like New Mexico, they'll start with an initial tranche and it gets filled up so quickly. There's all this excitement and then it's kind of filled up and then everyone's starting to wait for the successive tranches. So those are great states to look at, those kind of the ones with community solar or let's say rec markets. But again, sometimes we'll come across a developer that's working in a state that has neither of those elements, but there could be some other wrinkle to their business, whether it's relationships with local municipalities or school systems where they have as potential off-takers. And we think, oh, wait a minute, that could be really interesting. There's less competition there. This could be a good place for us to finance a developer or work on a construction financing portfolio for that type of developer or middle market IPP.
Yeah, definitely. Those are really great feedback, and I appreciate you explaining. I know we mentioned this before, Rich. You mentioned it just now that you've been looking at RPS legislation for 20 years, and God bless you for doing.
I'm a nerd, I know.
I mean, honestly, I feel like to be successful in the industry, no matter what side you come from, like you have to really understand the policy and get really deep into the policy weeds to understand whether these are good projects, whether they're financeable. I'm sure you talk to many developers and they tell you they have the greatest projects in the world, and you have to really understand obviously the project economics, but then also the state level incentives and federal incentives. Can you actually, I mean, I know your background really well, but it would be great if you could share with our listeners who we call Maverick, your background in renewables. It's been pretty extensive what you've done.
Yeah, sure. So I actually started my career out of college initially as a environmental geologist working in environmental consulting engineering. So I was in the field a lot early on in my career, working on landfill to gas energy projects. So I had the opportunity to see how things were built up close and things that can go wrong as they're being built. So that gave me an appreciation for just ground up engineering projects. And after business school in the early 2000s, since then, really, I've worked in some shape or form in the energy sector. And from either a renewable energy credit investment perspective or brokerage perspective to investment analysis and execution. So, for example, worked at R&K Capital. That's when I think you and I first met. That was pre-financial crisis. And I worked as an investment analyst there on anything from publicly traded to private project-oriented investments in energy, ranging from natural gas to renewables. And then really post-financial crisis, I started at Carbone and co-founded the brokerage business there, the energy research business, capital markets business, and then co-founded a spin-off Captona that is an active investor today, to this day, in renewables and energy transition opportunities. At Carbone, it really gave me an opportunity to work with a wide variety of investors, utilities, developers. So it really enabled for me to get a strong perspective from different groups, if you will, or perspectives from each of these different segments in terms of what their wants and needs and concerns were in energy related transactions. And I think that's really benefited me as I've continued on in my career, because I think that, as you know, I mean, being as long as you have in the energy sector, folks have different perspectives based on where they are, whether it's an energy broker or marketer, an investor, a bank, a utility. And I think understanding how different people or different groups view things and value things can be helpful in facilitating transactions. So, and I find that helpful with our work at Rosemawr.
Yeah, definitely. That's really interesting. And, I think it's great too. Like you basically see all the different perspectives. So then you're able to kind of understand things on a deeper level, I believe, by having that experience. And what's interesting to me is like the team at Rosemawr, the renewable energy team, you guys worked together in the past. Can you talk about like how that's really been beneficial as well? Like, obviously you must have had a great working relationship with them to make the transition or the move. And how has that actually helped as well with, finding, new opportunities or closing on deals and working together?
Yeah, sure. So Josh Hurlins, who's our CIO with our group at Rosemawr Sustainable, yeah, Josh and I worked together, I guess, close to 10 years ago at Carbone and Captona, and kept a longstanding, relationship throughout until starting working together again 4 years ago when we started Rosemawr Sustainable Infrastructure Management. I think having that long-term relationship, it helps in multiple ways. I think there's a certain level of trust there, understanding how people work together and how their various strengths can dovetail together to come up with the best product for things. And Zubair Qureshi, another partner on our team, he and Josh worked together for years at Oryx USA. And so again, I think having that long-standing history together is super helpful. I think we can kind of go into a conversation understanding where we may have certain positions or views on things. It kind of can help us get to the bottom of things more quickly. But bottom line, it's just been a great team to work with. And again, Rosemawr Management has been super supportive of what we're doing. So it's been a real pleasure working with the broader Rosemawr Management team, as well as with our team at Rosemawr Sustainable and folks like Josh and Zubair, who collectively we've worked together for a long time.
Definitely, that is really interesting. And obviously, I think that, relationships scale in a certain sense, right? That you're able to move quickly through transactions and have that honesty and comfort. What trends are you seeing in the solar industry? Obviously, there's a lot going on, and the roller coaster or the solar coaster keeps its ups and downs and windy turns and always keeps on changing and advancing, and still, exponentially solar's coming online, both in the US and internationally. It would be great to get your perspectives of what you see.
Yeah, for sure. I was just looking at some basic stats, and in 2010, solar was 0.1% of our energy mix in terms of megawatt hours in the US. And by last year, it was 6%. And, 6% still, like, that's a massive swing in terms of the megawatt hours delivered within a 14, 15-year period. So the trend there that's continuing is just sustained growth for a period of time. The other thing when I look at 6% is it's still like, that's not a big number. So it's indicative that there's still a long runway ahead. So it's just been a tremendous amount of growth over a relatively short period. With all that being said, we're kind of in this like period where certainly I would say even pre-IRA Inflation Reduction Act to today, we were growing at a really high compound annual growth rate in the solar industry. And now we've reached this point with the new administration and this budget resolution that was just passed in Congress a couple days ago, that there's more uncertainty that we've had for quite some time. And so, when I think of trend lines, when you mention the word trend, I think of just like okay, what's the trend line? Where's it going from point A to point B? And we had this kind of firm trend line going up. And now, until we really have the budget resolved, I think where that trend goes is a couple different perforated lines. That point B could be flat, it could be up again, and it's to be determined. So we are in a period that's uncharted, relatively speaking. And I think it will impact investment decisions, at least for the foreseeable several months, because there's less certainty over the ITC now in terms of how long it's going to be around. And depending upon how long it's going to be around, what is the structure going to be relative to where it was, where it is today and where it was yesterday. So from a trend perspective, it's tough to say. I'm still cautiously optimistic. When I look at the US energy markets and the amount of demand growth that I think our demand growth went up 2% last year, which is a big uptick. Even though it sounds like a small number, nationwide, that's a big uptick. From all I've seen, even with this deep seek, whether or not it's going to reduce power demand, it's relative to other AI, technologies, but I see power demand going up significantly. So we're in this new paradigm. And then the question becomes well, okay, how are we going to fulfill this? And you look at natural gas and say, okay, let's just say for a second, it's just going to be natural gas and nuclear. I'm not against either technology, by the way. I don't believe in any silver bullets in the energy sector. So, but let's just say for a second, we go to a silo and just focus on nat gas and nuclear. How easy is it going to be to scale up and meet these demands on a year-over-year basis if it takes, say, 3 years to develop and build a nat gas plant? When you look at renewables, when you look at solar storage, the vast majority of the existing queues are solar and renewables and battery storage. And these projects are, in many instances, can be much more quickly implemented and put onto the grid. So I think there's a lot of benefits, certainly. And, I'd be preaching to the choir, talking to you about the benefits of solar, but I think that it'll be interesting to see how those benefits are valued and weighed versus how, I think politically the ITC is viewed these days, going forward, and that taking into account our energy needs. It'd be one thing if we're flat, like we were historically for close to 20 years, but with where we're going forward and how competitive we need to be as it relates to technology, we're going to need a lot more power. And I think to just go down one route, we're just going to do nat gas, just do nuclear, I think it sets us up for problems. I think the same would be said, by the way, if we were to say, let's just do renewables. Let's just do intermittent power. I mean, that's a setup for something that can be problematic too without some sort of, transition period. So it'll be interesting to see what happens within this next year. I think this year, 2025, is a big year for our industry because we've been on the trend line has been so strong in the last couple of years. And I think we're in for some sort of change. I just don't know what it is. But with all that being said, I'm still cautiously optimistic. And I think the benefits of solar, for example, no pun intended, will shine through in these debates, and I think that you could argue having more solar renewables is a national security asset because on a go forward basis, it doesn't require any feedstock. So we're not using any US based natural gas to produce solar or wind. It's O&M, and that's pretty much it. So once you put an asset on the ground and you've got a solar array, it's going to last for 30 plus years. And there's no feedstock required for that. So any extractive, whether it's oil or primarily natural gas, it doesn't have to go to producing electrons for that particular plant. And so I think that kind of benefit needs to be looked at as well. One could argue there's a long-term just national security element to having more renewables because we're not requiring any extractive element from our society, at least with respect to solar. And that's a benefit relative to something like nat gas.
For sure. I agree, obviously, with everything you say. And, energy independence should be talked about a lot more. And it's localized energy, right? You're not dependent on transmission and distribution coming from a major plant. I think you're right. Like, it's interesting. You also mentioned load growth is going to increase a lot more than 2% going forward. So we need all energy resources to come online as quickly as possible. And obviously, most of the projects in the queue, as you mentioned, are solar plus storage. Can you talk about like how maybe we could change, maybe have some sort of permitting reform that would help expedite a lot of these
Yeah.
solar and storage projects?
Yeah, I do think permitting reform is hugely important to the energy sector on a broad basis, not just renewables, but also, let's say, natural gas. And, I think things went fairly far with the Manchin related bill, but I think where there's still a lot of lack of certainty around that. I think the new administration, there's going to be a lot of support for streamlining permitting. And I think that's an area of bipartisan support because permitting issues have really held back a variety of projects. And let's face it, not just renewables, natural gas, oil, and mining. So, when we talk about mining and, I think the inconvenient truth with batteries is we need to really think about where do all these minerals come from? And right now, the vast majority of them don't come from, onshore mines. And we have tremendous resources and things like copper and lithium. And through our inability to adequately permit projects, it's really held back our ability to mine. And, at the end of the day, these batteries and materials within them don't just come, drop out of the sky. They ultimately come from mines somewhere. And my argument is always, if you want a mine to be operated as environmentally friendly or least damaging amount possible, is to do it closer to home so you can, regulate and manage it as opposed to wherever else the materials are coming from, today. And also just from, as importantly, just from a supply chain perspective, having more upstream mining in the US, I'm a big supporter of. It's not something that's normally, I think people tend to kind of tie renewables or battery with is mining, but it really has to be. There is an extractive element, a big extractive element to the battery storage business. And I think streamlining permitting of critical mineral mines in the US is going to be super important for us. And I think I'll just do a shout out to a couple books I've read recently. One's called Volt Rush. Instead of Gold Rush, it's just Volt Rush, VOLT Rush. And the other is called The War Below. These are both recent books that have come out, and they talk to the needs, the challenges, the strategic issues around critical minerals. They were really eye-opening and illuminating to me. So I think anyone in the industry be helpful to take a look at those. That would be my 2 cents.
Yeah, that is really interesting. We actually normally do talk about what books people are reading. So we'll have that as well in the notes of the podcast. And this is really like interesting perspectives on the industry that I think we need to talk about more. I think energy independence is a huge part that doesn't get talked about enough. It was really interesting to me. The New Jersey BPU president was mentioning that, which is another thing people don't correlate, is with all the solar in New Jersey, it's allowed less infrastructure upgrades and has saved the ratepayer a lot of money. And that doesn't get talked about. Once you have distributed energy or localized energy, that puts less constraints on the transmission and distribution network, which is very old in the US and needs to be upgraded. So, some of these benefits that we don't talk about, really, we as an industry have to educate, obviously, politicians, regulators, and, to understand this, because I feel like these things are not talked about enough and are very important.
Yeah, fully agreed. I mean, I think these states that have set forth incentive programs that are really ratepayer funded primarily as opposed to taxpayer funded through federal auspices have, I think most all the folks in those states or the experience that have had experience with them have viewed them as being big successes, like New Jersey, like Massachusetts. And, New Jersey, yeah, that's a great point, Benoy, in terms of just the argument can be made that the more DG that's been built, as you know, I mean, being in New Jersey yourself, I mean, there's been just tremendous amount of megawatts installed capacity on a lot of rooftops, a lot of DG in New Jersey and all those PPAs, so many of them that have been struck, well, alongside the incentive of having SRECs or TRECs at lower price points than what those power consumers would have been paying otherwise. So, yeah, just been a huge, benefit there. Not to mention the jobs that have come into states like New Jersey for all this, construction that's gone on. And then after the construction, it's like, okay, who's going to do the O&M on this? In solar, it's always like, oh, it's built. Okay, it's good to go. And it's like, no, this thing needs operation and maintenance. And who's going to take care of it? There's jobs that come along with that are just like ongoing. Until that system gets taken down, there's a lot there. So there's like during economic activity and jobs that come with these projects. And so I totally agree. I think these things need to be mentioned more as discussions go forward this year, because I think while there was a lot of support for our industry in the last administration, I think there's a lot less now in the current political environment. I think to get back to kind of bipartisan solutions comes to, I think it's important to get to these discussions around what are the benefits, what are the things that are really helping here with things like solar. And there's a number of them. And a few of which we're talking about right now.
Yeah, definitely. It's interesting too. You mentioned about New Jersey, obviously, all the jobs that were created. The other thing that I was going to say is with the very fruitful SREC program, businesses, large companies, and small, mid-size were able to get very low electricity rates, which, electricity is one of the biggest expenses that these businesses have. Sometimes I know people within the government felt like the SREC program, it was the developers getting these juicy development fees, but it's extremely competitive, and specifically the New Jersey market now, and saturated with developers and EPCs. And so a lot of that potential margin with the SREX is actually going to the end user of those electricity, basically installing electricity, whether they own the projects or through PPA. So, that also creates economic opportunity too. When one of your biggest costs, you're able to basically hedge it, and then it's a lot lower than you were paying in the past. So
Yeah, absolutely. I agree on everything you say. I think that these programs like New Jersey, they've been hugely successful in a number of ways with having these RPS programs in place, whether it's reducing electricity bills for the consumers on those project sites or reducing the need for infrastructure in some cases because of all this DG. And then also, other elements like jobs that we've talked about. So just the amount of economic activity that goes in when you're investing billions of dollars, which is what's happened in New Jersey, there's going to be a lot of ancillary benefits from that.
yeah, definitely. Well, this has been an amazing podcast interview, Rich. I appreciate you making time. If our listeners who we call Mavericks wanted to learn more about Rosemawr or you, what's the best way for them to do that?
Yeah, sure. I would just say through email, contact me on LinkedIn. Pretty easy to find at the end of the day. And we have, as I mentioned before, Benoit, this market's so fragmented. There's so many folks in it. And it requires a lot of conversation and discussion and turning over stones to find opportunities. And then that's a mutual thing, whether it's Rosemawr and a developer or an IPP, back and forth, vice versa. So we're constantly engaged in these sorts of conversations on an exploratory basis to see where things lead. So yeah, by all means, email or LinkedIn are pretty easy to get me.
Yeah, definitely. We'll have that on the notes of the podcast as well. And I really appreciate this has been a great podcast interview. And yeah, it's just amazing. It's been 15 years, and I'm sure I hope to be retired in another 15. But I do so 15 years from now, we'll both be retired, enjoying the beautiful weather and other stuff. But this has been an amazing interview. Thank you again for your time, Rich. And I appreciate your perspective and all the experience and everything that you've.
Thanks so much for having me, Benoit. Really appreciate it. And your podcast as well. So yeah, keep it going. I think just spreading information, different people's viewpoints around solar it can be like, for me, it's super educational to hear what other people are up to, what they're doing, how they're seeing things, and getting into the weeds about what people do is super helpful for me. So thanks. Keep doing what you're doing.
Yeah, definitely. We'll keep promoting solar, and yeah, it's just exciting. It's still early within the energy transition. So even though we've been there
Agreed.
for a long time.
Absolutely.
Thanks, Rich.
Thanks so much, Benoy.
Thanks for listening to the Solar Maverick Podcast. The Solar Maverick Podcast is brought to you by Reneu Energy. We're a solar development and consulting firm. If you believe that this podcast is adding value to you, please give us a 5-star review and share with those that you think could benefit from this information. Please email all questions, suggestions, and feedback to info@reneuenergy.com. That's info@reneuenergy.com. The Solar Maverick Podcast is produced by Podcast Laundry and executive produced by Benoy Thanjan and Kevin Y. Brown.